So the key focus throughout this morning has been provisions for credit losses. There was an extra $6.8 billion for the quarter, and that splits roughly two-thirds from the consumer, mainly credit cards, one-third corporate, which is mainly oil and gas, real estate, and retail. But how big is that $6.8 billion number? Well, it's a build in one single quarter, bigger than they've had to do for an entire year since 2010. It increases their total reserve built up over many years, of course, by 40%, the total at $25 billion. And that means they've now reserved against roughly 2.3% of their entire $1 trillion or so loan book. Importantly, CFO Jen Piepszak said on the call that they were factoring some of the potential benefits from various government bailout programs and an improving economy in the second half of the year. So it's still not a worst case scenario. Here she was on the call.
After we closed the books for the quarter, our economists updated their outlook, which now reflects a more significant deterioration in U.S. GDP and unemployment. If that scenario were to hold, we would be building in the second quarter, and builds could be meaningfully higher in aggregate over the next several quarters relative to what we took in the first quarter. A primary unknown is the duration of the crisis, which will directly impact losses across our portfolios.
CEO Jamie Dimon said getting back, hopefully the economy will get back, hopefully sooner rather than later, but it won't be May. We're talking about June, July, August, something like that. What about the positives in the earnings? Well, trading very strong. That was expected. Less expected, asset management saw AUM increase by 7%. Impressive in these declining markets. Even most of the flows were into money market funds. Guys, the stock is up a couple of percent this morning. Interestingly, it's up 29% from its 23rd of March low. It's down 29% year to date, which also marks its 2020 high. So right bang in the middle there of the recent sort of 3 or 4 month ranges.
You know, Wilf, I think that March 23rd low, one of the things that Carl asked me at the beginning of the show, how do you feel about the retest? That March 23rd low was absolutely a crash. Mm-hmm. It was a crash like I haven't seen since '87. I mean, prices we lost control of prices. We didn't know where the market was. We thought that there were stocks like I looked at Starbucks. It was 56. Then it was 52. Then it was 54. That JPMorgan was part of that morass where you just didn't know where the stock was. That was very much like Monday and Tuesday of the crash. So I think one of the difficulties of trying to think that we're going to retrace is that we didn't know even where stocks were. That's how broken the market was that day. I look at JPMorgan. JPMorgan stock is down huge. So, I mean, the idea that it's just kind of stabilizing at 100, Wilf, you got to admit, it's nowhere near where the thing was. So it has taken a big hit, even though it's not where it was on March 23rd.
Right. It's down 30% still year to date. But Jim, as you rightly say, right on that 23rd of March peak of panic was because the market was trying to guess what percentage of the economy was going to go bust, which becomes a guessing game. So you see outsized moves. And I think that, again, comes out key in this earnings call. Jamie Dimon said as well at one point towards the end of the call, he said that you're foolish to try and model these things. On one level, we've never dealt with an economic hit as dramatic as this. On the other hand, we've never dealt with government programs like the PPP lending program. So again, I think at this stage, you're trying to gauge, and he was very clear on this, saying we're going to have more provisions in Q2. We don't know what those are yet. You're trying to gauge how many companies are going to go bust, and that relies very much on whether these government programs work or not, how long they have to run on for. They can only do it 1 quarter at a time yet. So they're trying to give all the numbers they can, but it's definitely not the worst case scenario yet.
Well, how about this theory? That companies where you can work at home, those are winners, and they're going to do well. And companies with great balance sheets, winners do well, and everybody else, it's every man for himself.
I think that's very clear. And again, he said it's going to be company by company and sector by sector in terms of where these credit losses come out. The one thing I would go back to is that total provisions, not just from this quarter, built up over time, against their entire loan book is just over 2%. I mean, that's high relative to history, but in these crazy economic times, do you think that's as bad as it's going to get, even though JPMorgan always has great quality of customers, fortress balance sheet, et cetera, et cetera? 2.3% of their entire loan book doesn't feel like it's a worst-case scenario yet. And again, Jamie Dimon saying there on the call, we're not going to open in May. It's going to be sometime over the summer, hopefully. Has the market priced that in yet, or is the market expecting a reopening and a broad reopening sooner than they're expecting? So I think there's just huge swing factors still to come.
Yeah, Wilf, they also gave a number on the dollar amount of checks that are out the door on that PPP loan program that you mentioned.
Yeah, and so in the slides this morning, it was 8 billion. On the call, they updated it to 9.3 billion. So shows the scale and the pace of how that's going. I think that related, off the top of my head, to 36 billion that's been approved. 9 billion is out of the door, so that the rest of that clearly going to come. Over 300,000 applications they'd received, JPMorgan alone. And again, this comes back to that point that if and when we see all of the companies get the money that they've wanted, I think we'll look past the imperfections of the rollout and be able to commend the scale of this program, which just vastly goes beyond anything the Small Business Administration has ever had to do in the past. That was the tone of what Jamie Dimon was saying on the call. He commended the SBA, he commended Secretary Mnuchin and the banks as a whole for getting to this point. Clearly, that's no consolation yet for the small businesses that have applied and not got the money yet. That said, I think that the numbers that are out of the door are still very significant relative to history.
Yeah, I totally agree.
All right, well, thanks for that.
Amazing.